Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, educational terms. I'm AlgoBot, your guide, and today we're examining an expert advisor called VWAP Pivot Reversion. This is a day trading mean reversion approach that blends two of the most widely watched intraday reference frameworks, the volume weighted average price, or VWAP, and the classic floor trader pivot points. Over the next several minutes, you'll learn how the strategy defines a stretched market, how it looks for a level to hold, and how it manages every entry and exit. Let's get started. So what does this expert advisor actually do? VWAP Pivot Reversion is built for intraday trading on liquid markets. Think a major foreign exchange pair like Euro, US dollar, or British pound, US dollar, or a stock index such as the US 500 on time frames from 5 minutes to 30 minutes. These are the classic conditions where VWAP and pivot points are most meaningful. The strategy rests on two ideas that institutional trading desks watch every single day. The first is VWAP, the volume-weighted average price. VWAP represents the session's average fill price, weighted by volume, so it behaves like a fair value line that price is repeatedly pulled back toward. When price drifts far away from VWAP, the strategy treats that as an overextension. The second idea is pivot points, the support and resistance levels calculated from the previous completed day's high, low, and close. These give objective, predefined zones where price has a tendency to react. The real concept here is confluence. The EA does not act on a stretched market alone, because a stretched market can keep trending, and it does not act on a pivot touch alone, because price can slice straight through a level. Instead, it waits for both conditions to line up on the same freshly closed bar. Everything is self-scaling through the average true range, or ATR, so the distance filters and the protective stop automatically adapt to current volatility. This makes VWAP Pivot Reversion most relevant to traders who are studying systematic, rules-based day trading and who want to understand how multiple reference points can be combined into a single objective setup. Remember, this is educational information only, not financial advice. And like any approach to the markets, it carries real risk, and losing trades are part of the picture. Let's walk through the exact logic, step by step. The strategy works on closed bars only. It waits for a bar to fully complete before making any decision, which avoids reacting to noise inside an unfinished candle. First, the housekeeping. At the start of each new trading day, the EA finalizes the day that just ended and uses that day's high, low, and close to calculate the pivot levels for the new session. The central pivot point, the first and second resistance levels above it, and the first and second support levels below it. It also resets its VWAP calculation because VWAP is anchored to the session and starts fresh each day. Any position still open is flattened at this daily roll, since the levels are about to reset. As each bar closes, the EA rolls the VWAP forward and updates the average true range. It then checks a few gates. It needs a completed prior day for the pivots. It needs a minimum number of bars into the session so the VWAP is stable. The spread must be within an acceptable limit, and only one position per magic number is allowed at a time. Now the core setup. For a long, the strategy detects two things at once. Price must be stretched at least the minimum stretch multiple of ATR below VWAP, a genuine overextension to the downside. And on that same bar, price must have dipped into a support pivot, the first support or, failing that, the second, but then closed back above it, showing the level held. When both align, the EA signals a buy at the ask, sets the take profit at VWAP, the mean reversion magnet, and places the stop a multiple of ATR below the pivot that held. The short is the mirror image. Price must be stretched at least the minimum stretch multiple of ATR above VWAP, and the bar must have poked a resistance pivot but closed back below it. The EA signals a sell at the bid, again targeting VWAP, with the stop placed above the pivot. Finally, there is a reward to risk filter. If price has already drifted so close to VWAP that the potential move to target no longer justifies the stop distance, the setup is rejected. So every trade is managed by one of three things: the structural stop, the VWAP target, or the daily reset. Here's the heart of the strategy as it appears in MetaEditor. At the top, we have the input parameters. ATR period sets the average true range lookback, defaulting to 14. ATR-stop-multiple, defaulting to 0.6, controls how far beyond the held pivot the stop sits. MinStretchAtr, defaulting to 1, is the minimum distance from VWAP, measured in ATR, that qualifies as an overextension. MinRewardRisk, defaulting to 0.8, rejects setups where the VWAP target is too close. We also have min session bars, max spread points, the fixed lots, and the magic number. Now the long block. The condition reads, if the close is below VWAP and the distance from VWAP down to the close is at least the minimum stretch, then look for a support pivot. If the bar's low dipped to the first support but the close came back above it, or else the second support, we have our level. The code reads the ask as the entry, sets the stop just below that support by the ATR stop distance, sets the take profit at VWAP, and only calls trade to buy if the reward divided by the risk meets the minimum. The short block is the exact mirror. If the close is above VWAP by at least the minimum stretch, and the bar's high poked a resistance pivot but closed back below it, the code reads the bid as the entry, places the stop just above that resistance, targets VWAP, and calls trade.sell once the reward to risk check passes. Both sides share the same clean structure. Let's bring the whole strategy to life on a chart. Across the panel, you can see the blue VWAP line winding through the candles. That's our session fair value reference, and, importantly, our profit target. Below price sits the green support pivot, labeled S1, and above price sits the red resistance pivot, labeled R1. These two flat levels come from yesterday's range, and they frame today's action. Watch the opening candles. Price begins right around the VWAP line, then a wave of selling takes over. The second candle closes lower, the third pushes lower still, and with each step price is stretching further below VWAP. This is the overextension the strategy is waiting for. But remember, a stretch alone is not enough. The EA needs a level to hold. Now look at the fourth candle. Its low dips down and pokes beneath the support pivot at S1, tagging that level. But by the close, price has recovered and finished back above it. That is the confluence the strategy was waiting for. Price is genuinely stretched below VWAP, and the support pivot has held on a closed bar. This is where the buy entry marker appears. The EA places its entry, sets the stop just below the support pivot, beyond the level that held, and aims the take profit all the way back at the VWAP line. Notice that before committing, the strategy checks the reward against the risk. The distance up to VWAP must be worth at least the minimum reward to risk multiple compared with the stop distance. From there, the rejection plays out. The fifth and sixth candles climb steadily as price reverts toward fair value, exactly the behavior VWAP tends to produce. By the seventh candle, price reaches the VWAP line, and the take profit marker is reached. The long trade is complete, captured between a held support and the mean reversion magnet. But the chart isn't done. Watch what happens next, because now the market sets up the mirror image. Price doesn't stop at VWAP. Momentum carries it higher. The eighth and ninth candles push well above the VWAP line, and once again price is stretching, this time to the upside. The strategy is now watching the resistance pivot overhead. On the 10th candle, price rallies up and pokes above the resistance pivot at R1, printing a high beyond that level. But, just like before, the close comes back. The candle finishes below R1, leaving an upper rejection. Here we have the short confluence. Price is stretched above VWAP, and the resistance pivot has held on a closed bar. This is where the sell entry marker appears. The EA places its short entry, sets the stop just above the resistance pivot, and targets the VWAP line below. The same reward to risk filter applies, making sure the room down to VWAP justifies the risk. Then the reversion unfolds in the other direction. The 11th and 12th candles roll over and grind lower as price is pulled back toward fair value. By the 13th candle, price meets the VWAP line and the take profit marker is reached. The short trade is complete. Step back and look at the symmetry. In both trades, the entry sat at a point where price was overextended from VWAP and a pivot level had clearly held on the close. In both, The stop lived just beyond that pivot, and the target was the same structural magnet, VWAP itself. The support and resistance pivots define where the EA is willing to act. The stretch filter makes sure it only acts from an extreme, and VWAP gives every trade a logical, predefined destination. That's the entire idea in one picture. Fade an overextension, but only when an objective level agrees, and let the market's own fair value line define the exit. Of course, not every setup behaves this cleanly. In real markets, price can push through a level and reach the stop, which is exactly why the protective stop and the reward filter matter. And that brings us to the end of our look at VWAP Pivot Reversion. We covered how the strategy combines VWAP as a fair value reference with classic pivot points, how it waits for price to be stretched and a level to hold before acting, and how every trade targets VWAP with a protective stop just beyond the pivot. Remember, everything here is educational content only. It is not financial advice, not a recommendation, and not a solicitation to trade. All trading involves risk, and losses are a normal part of it. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.